The metaverse is a representation of communities that exist in that space that we spend more time in. So that's why, Discord is an example, right? People will now spend a lot of time on Discord, right? Discord is open. They don't trap you in. See the difference between Discord and Facebook, right? Whereas you can exist in many different communities. I think the winner-take-all market is actually the person who can connect the communities, right? So that you can spend different times in different communities.
Let's just go and see the world and just show them what it really means to live life golden. Yeah, we're golden, baby girl, we're golden.
All right, rock and roll. Welcome back to the potty, brother.
Thanks, mate.
It's a crazy time at the moment in the world. And I think lately what we've been having discussions around is just, it seems like every week there's something new, and, a massive event from a global and macro outlook that we kind of have to talk about. Mm-hmm. So last week we obviously seen, the inflation numbers were released. And, obviously we've been having a lot of discussions in the background. What I might get you to do is to we can kind of set up the conversation, but what is inflation and how is it measured? And then more importantly, how was it measured, back in the 80s? And then what are the things that are left out of that basket as well?
All right, so
that's a big question. That's a massive one. That's probably going to be the episode. Answer those, and that'll be it.
I'll try not to bore people because it's very technical, obviously. But inflation is basically, it's an indicator that shows how well the economy is growing, and it's all about your purchasing power and the goods that you can actually purchase with the money that you are able to save. And so, inflation is calculated based off like a cost, like a bag of goods that we would spend on a daily basis. So back when it was originally intended to be used as a metric, they included the cost of housing, auto, food, electricity, all of those sort of things. Whereas nowadays they have a very controlled bag of goods that they look at, and it's very manipulated to basically show that inflation isn't running too hot within the economy. Because if you factor in just the rising cost of property, for example, then you know for a fact that we've been running hot for a very, very long time. But now the same thing applies today. So the way that they used to do it is it would just be based off this mixed group of goods and services, and they would just use that figure. And so they currently use the same figure in Germany. So they didn't actually change theirs. And inflation in Germany is now at 11.7%, which sounds about right, doesn't it? Mm. Whereas in the US, it was just forecast at 6.2%. Here in Australia, it's forecast at 3%, when we all know that it's a lot higher. And I use the example of steak, for example. So steak, if you have an eye fillet and you have a rump. So eye fillet, say it's $20 a kilo. Rump steak, it's $10 a kilo. If they both go up 10%, rump's now $11 a kilo, eye fillet's $22 a kilo. So that's a rise of 10%. The way that the CPI calculates that is if, say, everybody shifts their purchasing decision from eye fillet to rump steak, essentially the CPI target is 0%. If 50% of people shift their buying behavior from eye fillet to rump, it's now 5% inflation. And they do this across the board. I was telling you about the car figure earlier. So back in the 1970s, it cost on average $13,000 to buy a car. Nowadays, it's $40,000 on average. So that's a price gain of about 300%. How much do you reckon over the course of the last 40 years, how much of that has been factored into the CPI?
How much?
5%. 5% out of 300. And the way that they manipulate that is, so back in the 1970s, you might have had like roller doors. Nowadays, you obviously have the electric ones, And so they substitute or they subtract the cost of the electric window. And then they also do it on the speedometer, on everything that is now digital within the car. They subtract that from that price. And so that over the course of the last 40 years, there's only been 5% inflation. But our wallets, we feel that $40,000 that's now come out of it. And so this is just one way of them manipulating that target. It makes sense though, because CPI, a lot of pensions and government pay and all this sort of thing is pegged to CPI, and so they can't obviously have that running hot. And if they have it running hot as well, that imposes a lot more issues as well. So they've taken a lot of goods out of that bag because it just doesn't look good for the society.
So what do you say? Because I mean, we definitely get some good positive stuff on TikTok, but we also get a lot of negative, right? And we posted a clip not too long ago about inflation, and people were commenting like, you know, some pretty rude stuff, but they were more saying, well, that's not how, you know, inflation's calculated, because you did mention property. So and it's true, right? That's not how inflation is calculated. But what's the reply to that? Like, you know, and you know, because that, for me, that's not a good enough argument. Like, that's not. It's like, yeah, no shit. Like, it's no fucking shit. It's not how you calculate it. But why not?
Well, they figure that it's more a cost of your living as opposed to the cost of the assets that you own. So the cost of goods and services that we purchase. So the way that they calculate, they shifted the calculation to just factor in your everyday sort of expenses. And so they thought that the cost of an asset that goes up in price shouldn't be included in that basket. And so that's the reason why it's not included.
Do you think that stems from, like, obviously being, I mean, America, right? But every, you know, countries around the world usually follow suit, being a capitalist society, right? Where it's like, yeah, like, and the reason that they obviously don't incorporate that is because, you know, based on the system we have, we know that assets will continue to go up, and that suits, you know, the capitalist mentality of you know, people that are investing.
That's directly correlated to money being injected into the system too.
Yeah.
So economic growth is stimulated by, firstly, productivity, so the amount of labour that we have in the workforce, and then also it's based on how much money is within the market as well.
Yeah.
So they can manipulate the money that's in the market. They obviously can't manipulate how many people there are to work within that society.
Yeah.
So
yeah, so and you know, I was just trying to kind of piece a few things together in my head then, but you know, I mean, kind of what I'm saying is, like, you know, we know that they print money. We know that the governments print money to fuel economic growth, and we know that benefits people that hold, you know, assets,
yeah.
Right? And then so that factors into the capitalist society, this mentality that, well, no, it's okay because we're getting this growth, and we're, you know,
and it benefits the super rich. So the issue with inflation is it benefits the super rich because obviously they hold assets. It's called the Cantillon effect, which is the technical term for it. It's basically like trickle down money. So whoever's closest to the person who's injecting the money, they reap the most reward, and then it trickles down to the bottom of society. But unfortunately, the issue with inflation is it takes away anybody in the middle class. It takes away a lot of their ability to sort of reach that next echelon of wealth, and then it completely destroys anyone down the very bottom end, unfortunately, because the cost of the things that you buy to feed yourself and to keep a shelter over your head
takes away from your ability to actually invest in those assets.
Yeah, because your purchasing power has decreased massively. So even if you use the official target, so say here in Australia it's 3%, if you haven't received a wage increase of at least 3% over the last 12 months, you are losing purchasing power. That doesn't even factor in the rate of printing and also the rise in real estate and equities and everything like that.
And they changed how they measured inflation in the 80s, didn't they?
In the 70s.
And that was, after the Bretton
Woods?
That was
after, yes, so that was after the last period of inflation that we went through.
And that was when they unpegged the dollar from gold.
Yes.
which means that you've now got a floating currency.
Yeah. So they did that because they needed to manipulate they needed to spur growth within the economy, and they realized that the only way that they could do that was to print more money, essentially. Get more money out into the system, which then would help to spur economic growth and everything like that. But the issue that we have now is that through fiscal policy, back then it was okay. They were able to combat inflation because they were able to raise interest rates to the point, like they could raise interest rates by 2%, and it, like, yes, it had an impact on the markets, but there wasn't also a massive difference in wealth inequality as well. Whereas now, because they've just reduced interest rates all the way down to zero, basically across the whole world, their only solution now is to just continue to print more money. And because wealthy people own assets and they can use leverage against those assets, because obviously it's so cheap to get money from all the banks, they just grow in wealth, whereas it becomes harder and harder for your everyday people to save up enough money in order to get leverage, in order to purchase property and other assets as well.
And that's kind of what I was getting at before, right? It's that capitalist mentality that, like, think about it. We unpeg the dollar and then we change inflation. It's almost like it's a bit of a cover up, right? It's like, well, why are we removing those things? Well, because now, if you didn't remove them from how we calculate, inflation, and people can go out there and just kind of use debt to fuel wealth, it's not an argument whether inequality actually exists or not, because you've got metrics and data to actually track it. Yeah. Whereas now it's like, well, yeah, like you can have the argument there and it's pretty obvious, but it's like, well, the government still has a leg to stand on, and even though that might be a false one. Mm-hmm.
And there was less wealth inequality back then too, so they were able to do all of this, but because they basically opened the tap, let all this money come in, and then gradually over time by opening the tap like that, it creates bubbles. And so when you have a bubble like that, obviously that causes a crash, and all the central bankers throughout that time, they want to preserve that, because that's basically everyone's underlying wealth. And if we go through a massive period where we go through a massive bear market and we potentially have a depression, obviously that's not good for society, because there's a lot of unemployment. When there's unemployment, a lot of crime creeps up. There's more deaths and all that sort of thing. So they don't want that to happen. So they artificially inflate the economy. And the issue that we currently see now, compared to even 2008, we actually had interest rates at around 5.5% back then. So they were able to bring it down. They printed, it was like $900 billion or something like that. And they bailed out a lot of these companies that were doing a lot of things wrong. But then because of that credit has just continually grown and grown and grown. So what they should have probably done is just allowed us to go through a
downturn.
Yeah, massive economic downturn, instead of just artificially inflating it. And now we've seen where we're at the point where they were only able to increase interest rates up to about 2% back in 2019. Mm-hmm. Once we had COVID, they brought that back down to zero. They printed trillions and trillions of dollars. Now we're at the point where they can't raise interest rates to combat this inflation at all. Say they increased inflation, it's at zero at the moment, they could potentially raise it up to 1%. They were to raise it to, say, 2% to try and combat inflation, their repayments on that debt would increase about 10%. And how are they going to pay for that?
So what's the consequence what's some of the potential places that, we can find ourselves in as a society, from... You just mentioned, the options. Normally, what would happen is you would increase.
We don't really know, because we've never experienced this before. We never experienced a time when we have this much credit in the system and we have nothing to combat that with. We really don't. And unfortunately, I sent you this morning that they're already proposing another stimulus package to try combat inflation. How nuts is that? They want to print more money to get us out of inflation, which was brought on by all the money printing that happened in the first place. And they think that just throwing money at the supply chain issues and everything like that is going to help to just alleviate a lot of this pain, but that's just not how it works, unfortunately. It takes time to sort of implement new systems, to build new factories, to get container ships and all of this sort of stuff. And yeah, it's not going to happen anytime soon.
So the next kind of phase of this is obviously more stimulus in the hope that it's going to combat some of the problems that we're seeing around the world, right? So, trade shortages, and a lot of those kind of things. That's what this next stimulus is trying to do. But the reality is stimulus, wherever that money goes, it's not like you can control. You can try to obviously create some structures that allow people to spend it in certain areas, but you can't control what people do with that money. Mm-hmm. What about, does this, what do you see in terms of this, we're obviously seeing people leaving their jobs. We're seeing, a lot of people are quitting their jobs at the moment. Is there any correlation here that you see?
I just think a lot of people have obviously entered into the equities market. It's now easier because there's zero brokerage, so the barrier to entry to actually get into investing has increased quite a lot. But now you also realise that people can make money doing all sorts of stuff. They can make money from freelancing. Obviously, the creative side has been a massive emergence over the last couple of years. There's more people making money from gaming and all these sorts of things, from YouTube. And so we're probably going to see now, and we mentioned this a couple of times, and we copped a little bit of flack for it, but more people are wanting to work for themselves as opposed to working for a company. And this is why we're now seeing a lot of companies starting to really jack up the salaries that they're offering, because they need to get people in. We're seeing unemployment at all-time lows, and yet job vacancies are at all-time highs. How's that?
How does that work, right? So that sounds like, to me, that again, it's like, okay, well,
so you just
how are they different, right?
Yeah.
Like, how are those two things different?
So the job vacancies is obviously your big corporates and or even your small to medium businesses that are out there trying to bring people on to come and work for them. And that can include even jobs at like McDonald's and that sort of thing. But people aren't going to rock up for minimum wage anymore because you can they got used to obviously having money provided to them from the government. And so they got used to that sort of standard of living.
This is where Web3 comes in, right? And like, it's like I was having this conversation with my sister-in-law, and like it's funny, like she was kind of talking about. I remember at the start of COVID, she says like, I'm getting all my tasks done in like 3 hours. Mm-hmm. And it's like, that stuck in my head for a conversation we were having the other day around, like, we were having this conversation, why are so many people quitting their jobs? Why? And the reality is, I think it's because, we're seeing, and we've talked about it, but we're seeing, wages not increasing. We're seeing, the fact that hierarchical organizations, although, that's the way that it's been done for many years and been successful, in the hands of the wrong person, they can be pretty tough places to work. But also, you're now getting into this place of abundance, right? You're kind of seeing, well, there is other ways to do this. We're seeing that with cryptocurrency coming in and the yields you're getting there. And it's kind of like that thing is like, once you see these things, you can't unsee them. They shift the way we see the world. They shift our belief systems. And maybe that has something to do with it.
We also have to factor in that a lot of people who were close to retirement have now left the workforce as well, and typically people who are closer to retirement own assets. They own equities, they own property, and so their wealth has ballooned, and so they don't have to work anymore. So maybe they're now retiring at 58, 60 instead of working all the way up until 65, and these are highly skilled people, obviously, as well, and so now they've just left the workforce. And so, like, how are you going to bridge that gap?
And the younger generation also don't have these responsibilities.
No, well, that's right. Yeah,
right?
exactly.
You know what I mean?
Yeah.
Like, if you don't have kids yet and you don't have to put money on the table, or put
you
food on the table,
you can afford to go out and potentially start your own business and take more chances. And, that's what we're seeing now.
Why do you think we cop so much flack about that comment? because for me, like, isn't it just, it's just where people should be or putting their mindset to. You said in that little conversation that, the work gets done from your auntie in 3 hours, meaning the rest of your day you can then put time towards your other hustle.
I mean, I honestly, I'm so bullish on this that I think the future is I think once you incorporate Web3 into everything, you have a wallet and you get paid for the work, not even for the work you do, for the value you provide, right? And that's where it's like someone who, there's people during the pandemic who went out when they got told they could work from home and actually got 2 full-time jobs. And it's like, that's a sign of what I think comes in the future, where everybody is self-employed. And when I say that, they might be, think about like a contractor. Everybody's self-employed, you have a wallet, and you can exist in many worlds, which we know that this is what the Web3 model, DAOs and these kind of things are all about. And, you get rewarded for efficiency and effectiveness.
We're also we're forced to go out and take these risks. And like, you see what's happening with like Robinhood, and you have all these 20-year-olds going out and trading options and all that sort of thing. They don't have a choice. Where are you going to get your money from? Where are you going to get your yield from? It's all right for our parents to come out and say that we're slack and lazy and all this sort of thing, but they've come from a period where they could earn yields on their bonds at 15% and then 12% and 10%. Where do you get that now? Bond yields are they're at 1.5%.
And housing, right? Like, the asset that absolutely everybody aspires to own. I think, what your wages were, your house prices were only 100% higher than what your wage was.
Yeah.
Now it's 600%, 700%.
For the first time ever, the median salary doesn't cover the basic living expenses. For the first time ever. Property now ranges from between, say, 40 and 70% of your salary. Like, we've got so many things against us, unfortunately, and I mean, crypto could potentially be an area that allows us to become the richest generation, because there's going to be a massive shift, because it doesn't make sense to have your money in fixed income anymore, because you're getting no yield whatsoever, especially when you factor in the inflation numbers. And so where's all that? Like, anyone who runs a pension fund have the fiducial duty to go out and earn a yield on that money for people who own those bonds. And so all of that money is going to shift out of bonds, and it's going to shift into crypto. Because how can you ignore an asset class that is going up this much?
Yeah, and I think from everything I've seen, apparently that's what's going to be the catalyst. From experts that I'm following, that there's potential of a time where, like, because of the money that's being printed and other countries relying on the US dollar, that eventually it gets to a point where in these other countries, you've got no other choice. The cost of living goes up so much, and you have to store your wealth somehow.
Even look at here in Australia. How our housing market is so unaffordable, it is beyond ridiculous. We haven't had a period where house prices have declined in over 40 years. Like, I mean, it's just a joke. And so, we have to sort of take these chances now. And I know people are cynical and like give us shit for this, but honestly, like, you have to look at it from a macro perspective. And in my opinion, the only two places really is crypto and property. I mean, yes, equity is probably going to continue to go up because they're just going to keep putting money into the system. But with inflation running at the way that it is, I wouldn't want to have my money anywhere else.
And I think that's the eye-opening thing, right? Is like, what does it look like for the next generation beyond us? We're in our peak at the moment, but what does the peak look like for the next lot? If it's 6 times harder for us to get into the property market, what's it going to be like? We've never seen this amount of money printed ever, ever. You know, like what we've quadrupled the amount of money that's in the system over the last 2 years, and then you've got the next one. You know, this next, bill that is going to get passed, or and again, it's another multi-trillion-dollar thing, and it's like, okay, cool, this is all good and well, but it's very short-sighted. You know, it's very like, let's try to fix the problem now at the expense of what could potentially happen later. Yep. And what is it? You know, it's actually unimaginable as to what it would look like for the next generation, and I think that's why it's not that. You know, I mean, I used to kind of be in this mindset that the philosophy was, you know, there's a narrative, right? And it's like crypto's the narrative and it's the savior and it's this. Well, it's like, no. Like, it was created and whoever, you know, like whoever created Bitcoin, if it was fucking, you know, Satoshi, then good on him. But whoever did create this, foreseen the problem that we were going through. And it's like, now you just don't really have any other choices. Right, it's like, you know, if you want to store your wealth, if you want to, build wealth now, and you can't afford to kind of get into property, the only other options, and especially if you're young, you're going to go where all the other young people go. You're going to
go online.
Technology. If you're a technological person, that's what you're going to do. Yeah, you know what I mean? Like, you're going to go down that path, and I just think that, you know, it's just going to be an interesting. The next 12 months is. It's a revolution. We just don't know what's going to happen. We honestly
over the next decade, that's for sure. We just we don't know where it's going to go.
You know, there's going to be some major events over the next 12 months. You know, we already can see this. It's like there's just every week there's something popping up.
Well, it's going to be interesting. So they're starting to talk about tapering, and there's been mentions of increasing interest rates and all that sort of thing because they want to try and combat everything that's happening with inflation. Joe Biden's come out and said that like this is his number one priority, and I just don't see it happening. Yes, they need to probably taper the bond repurchases, but I don't see how they're going to be able to increase interest rates at all to beyond 2%, because it's just going to cause the market to come crashing down. And what are they going to do?
Print more money.
Print more money, because when the stock market decreases, it's a sign that the economy's in a bad way. There's going to be job layoffs. People won't be able to afford to feed themselves, to pay for their accommodation. The only thing that they can do is to continually print more money, and they're just going to have to inflate the debt away. They don't have a choice. And the US over the last 40-odd years, they're now a creditor. So they used to be a debtor. They used to sell goods, and they used to have a surplus of money that came into the system. Now the only thing that the US exports really is the US dollar. And what do countries do when they, like the OPEC nations and all that sort of thing? They just buy up US equities. And so this is why we're now seeing equities at a point where they're just so heavily inflated. And the only way for equities to grow is to continually put more money into the market. That is literally the only way for markets to grow. And now we're also seeing with tech companies, they're less labor intensive too. So a lot of that wealth is now going towards the people that own them, instead of just like broadening out amongst all of the employees. Like your old companies like GE and General Motors and all these sort of companies. And so now we're just seeing the wealth inequality just continually skyrocket. And yeah, it's going to be interesting to see what happens. It'll be interesting to see if we ever go down the route of what China's currently doing. You know, I mentioned to you before, they are purposefully tanking their property market.
Explain why that is, because I mean, it makes sense. You know, obviously, once you you understand their culture and what they're trying to do and the current state of the world, definitely makes sense. So,
in your modern societies, your property typically makes up about 6-7% of your annual income, as in 6-7 times the amount. Whereas in China, it's about 30 times. And so now you're seeing a point where they also had the one-child policy. So they were only, their labour force was only growing at about 1.2%. And in order to keep up with where they need it to be, it probably needs to be at about 2.1% And so they abolished the one-child policy and said, hey, go out and have 3 kids. And it didn't happen. Why? Because a lot of men are still living at home. And so they're not desirable for women. And so this is what they've done. And so people have just gone out and they've just been buying up properties. And so most people over in China have about 2.5 properties on average. And so they've just propped up this market to the point where it's now 30 times their annual income. And so what they're trying to do is to make it more affordable for your everyday people. And so they're purposely tanking the market. And so this is what's been going on with all the property developers. There's now 8 property developers that are going insolvent. And so we're just going to see all of them wiped out. You'll probably see the whole banking sector, like there's going to be huge holes on their balance sheet. China will come out and they'll probably they'll insure all of the depositors, so everyone who puts money within those banks. So those people will have their money, but those banks will go to zero. The property developers will go to zero, and we'll see.
And that's because they don't want to lose their middle class.
Yeah, they purposely want to bring down the price of property, and they're going to keep it flat.
Because that means that they can keep control of their people. That's why they banned Bitcoin mining. That's why they're.
Well, it's going to be interesting what they do with their central bank digital currency, because that's going to be. You can already see, like, if they come out and say for any goods and services that we purchase from China, if they
I got the hiccups.
Distracted
keep going. Sorry.
If they come out and say to anyone who purchases goods and services that you have to transact using our currency, like, you can only imagine what that would mean for the world. Like, if you start going out and purchasing their goods with their currency, they could potentially shut you off completely. And they could, like, say...
Shut who off? The world?
No, they could potentially shut off whoever wants to come and do business with them. So if you come out... So say, for example, China owes you $1 million for whatever reason, and China only pays you $800,000. And then, so you're missing out on $200,000. You go out onto Twitter, on Instagram or whatever, and you say, oh, China did this, I'm now out of pocket $200,000. What are they going to do? They're going to buy you. They're going to seize all the money that they've given you. And then...
That's it.
That's it. And they can apply this on the world stage if they start to transact in their own currency. Because they ultimately want to go away from transacting in US dollar. So a lot of goods that they purchase, they have to transact in US dollar instead of their own native currency. Mm. And so this is the reason why they're going so hard on it, because they want to gain that control. They want to have insight on everything that you do. It's scary reality that could be.
Mm. So what's the overview then, before we move on to the next topic, right? Like, what's the, because obviously, you've mentioned that where we think you got to put your money just based on this kind of thing. But what do you think on a global macro perspective? Like, what do you think is going to happen over the next 12 months?
So typically, as I've said in the past, inflationary periods, you want to own commodities, you want to own hard assets, so things like oil, things like gold, all those sort of things. You also would probably want to own, in my opinion, Bitcoin. You want to own property. Equities probably won't go down because they're continually printing more money. So value stocks especially will be a good place to have it. And then potentially in emerging markets as well. So that's where I would have my money, to be honest.
It's interesting times. Mm-hmm. It's definitely interesting times. Mm-hmm.
And then even with property as well, like, you're probably wanting to, especially now that we're in this period where everyone wants to work remotely and those sort of things, if you want to combat inflation, I'd be looking at markets like here in Australia. You probably want to be looking in more rural places instead of in your big city centres. So places like up in Byron, Gold Coast, Sunshine Coast, and then all sorts of different places like out at Geelong and Phillip Island and all these sort of places, because that's where you're going to see most of the the price appreciation as people start to realize that they prefer to spend time at home with their families.
It's very true.
So
We've already seen that.
We've already seen it. Yeah,
Yeah.
exactly.
We've already seen that. That's like up on the peninsula, prices went bananas and still are.
Yeah. And it's going to continually go that way. Especially people who live in your city hubs, like they'll probably look at buying second homes, third homes, all those sort of things. And those sort of markets will just go gangbusters.
Very interesting times. Very interesting times. I think one thing that I wanted to actually talk about as well, which I think is very interesting, like something I've been looking into a little bit is, like Miami not bringing out, like Stacks, created Miami Coin, and now Miami Coin, Miami, the governor of Miami has come out and said that all the money that they make from Miami Coin is actually going to be transferred over to Bitcoin, and then they're going to start paying out holders of Miami Coin in Bitcoin payments.
Yeah, they'll pay dividends.
Yeah.
And New York City's just copied them as well.
Yeah. So yeah, like I actually invested in New York City Coin.
Oh, you did?
Yep.
Oh, wow.
On the weekend, yeah. Just a little bit. I mean, it's at 0.00003. I don't even know how to present that as a number, but
it's a cool experiment, because ultimately what these cities are trying to do is they're trying to obviously build up
the economy.
It's
an economy within an economy. They're
Exactly.
they're trying to attract people to live there. They're trying to attract people in there, and it's funny that it attracts a certain type of person. It is a hedge against inflation, right? And if you're a resident in that town or in that city, and you purchase this coin, which again gives the government flexibility in terms of payment, and obviously building wealth, and then they reward you. It's the Web3 model.
Well, that's it. Like, typically when you live in a city, obviously you go to a certain city because you feel like you can get economic prosperity from living in that city and networking and that sort of thing. But when you live in cities, obviously then you are subjected to whatever taxes and all the different fares and that sort of thing that you have to pay within that city. With this concept is you'll actually get rewarded by dividends for doing so, for actually contributing to that city and making the city a better place. And so it's a really cool concept, and really interesting to see where it's going to go. And I think we'll probably see a lot more cities do it.
Oh, 100%. And yeah, I just think it's a really interesting. It's in the early days, right? And not by any means are we saying it's going to work or anything like that. But I think it's interesting how we're starting to see a shift that's how kind of the US works. But we're seeing individual cities going, well, hang on a second, this is the situation, and this is a solution that I can really see that can work. And we're seeing a lot of people coming out, and more importantly, different cities coming out and saying they want to be hubs for cryptocurrency. It's a chance for, you think about what Silicon Valley became, and it's a chance for different cities to kind of do that. But we're now, and I think about that from a model of potentially what could happen in countries. You're seeing El Salvador, obviously, doing what they're doing and just buying dip after dip, but you're seeing massive problems, that have been stemmed from inequality, that has probably, has stemmed from, the printing of money of the US dollar, which they were based on. We're seeing massive things change over there as well. And I just think that it really does seem like it could just be a matter of time before we're seeing the same thing roll out with many different cities. And especially if you're getting someone who's, pro Bitcoin and pro cryptocurrency. I just think it's an amazing time, and I wonder what ripple effects that has on the rest of society. Maybe at a country level. Can we?
Well,
we think about it, right? And it's like I often look at it. I think about that, and I go, is that the model, right? Like, what would happen if the US come out and did that at a country level? They brought out their, a cryptocurrency, and they rewarded people for purchasing. So, it's not that you have to put all your money and that's the currency you have to operate in, but it's an asset that you can own, and you'll get rewarded if you own it.
Well, it's just like China buying up gold and buying up land and all those sort of things. Yeah, if you put it on the balance sheet, it could be that sort of hedge against everything else. And that's not to say that the US dollar is going to go away, because it probably won't. If it happens to devalue and whatever, they'll just bring out a new one. It might be a digital currency or whatever the case may be. But they don't want to lose control of being the reserve currency for the world. That's the way that they see things, and that's why they could potentially regulate it all in the future, because they don't want it to get too big. They don't want it to become this thing that replaces the US dollar. So,
I think that's a watch. That's a very interesting watch. Miami coin, New York coin, but more so from not an investment standpoint, just more from a model standpoint of potentially hedges against inflation and
bringing about prosperity for its people.
Exactly, because it inflation takes that away, right, at its core. So I think that's a really interesting one.
You know what's interesting is we have one of the highest adoption rates for crypto, and yet we don't have anything happening like that.
You know why? Because it's. I mean, I don't want to fucking go too hard here, but it's Australia is one of those places that we lack innovation, right? And I think it's because of our mentality, like as a country,
Well, we rely so heavily on our exports, and that's also where our governments make a lot of their revenue as well, from taxes. And so they don't want to break the model that obviously works for them. And usually, like in normal circumstances, the amount of money that we export, or the amount of goods, that we export and bring into the country, dollars, is typically leads us to an account surplus. So we become basically a debtor. So it generally leads to prosperity here in our country, and our economy will grow because of that. And so they don't want to shift away from that model. And that's why, so we've seen all the issues around Australia committing to the emissions targets and all that sort of thing. That's the reason why. We don't want to lose our standard of living and all that sort of thing. And that is why we're having such a hard time shifting towards that. It'll have to happen eventually, but yeah. I don't know. I don't see it happening anytime soon.
Yeah, I mean, I'm not too sure. I think, as I said, we've got a high adoption rate of Bitcoin.
One of the highest
crypto,
in the world.
More importantly. One of the highest in the world, but we just lack that innovation. And I don't know why. I mean, there's obviously those things that you just talked about.
Same applies to startups, though. Like, there's no incentive here in our country, unfortunately, to go out and pursue a business, or to pursue building your own business.
Yeah, 100%. There's just...
And we come from old money too. So, and a lot of that old money is parked in real estate, and it's parked in bonds and ETFs and all that sort of thing. And we're not very liquid. Like, we don't have a very diversified venture capital industry, private equity industry. And so those are the sort of things that spur that innovation. So unfortunately, that's to our detriment.
Yeah, and I think... You're seeing. I mean, we've talked about this, and you're seeing that right now. Who could imagine any? It's not even on the spectrum at the moment. It's not even a thought. And I think that's a sign of where we're at from a technological standpoint as a country. I think we lack innovation, and it's because the incentives aren't there. You look at let's look at one of the most innovational places in the world right now. You got Austin. In the US, and you got Miami. Miami was, when the pandemic started, and I'm not saying that I agree with this, but they made a decision, and I would say it's from an opportunistic standpoint that, hey, we've got a choice here. We can either fold like everyone else and put everyone into lockdowns and really halt economic growth, or we can go against the grain and say, well, COVID doesn't exist, basically. And
well, what they did is essentially, like, there's no state taxes in those two states. And so that obviously incentivizes corporations to go and set up there. And in doing so, like, you see it with Tesla. Tesla is one of those companies that employs the best people in the world, the smartest people in the world, and probably, like, the highest paid workers in the world. They're now all shifting towards Texas. And so that's just going to build up, obviously, the economy there too, because all of those people are going to relocate. the market's going to improve, and that's going to obviously trickle down towards everybody else who lives there. And so, yeah, we just don't have that happening here at all, unfortunately.
We definitely
all of
are.
our money's tied up in
It's old
property.
system. Yeah, it is, isn't it? Right? Like that's kind of where you go to. It's like we're such old money and old system that we just, and that's why, we also pay a lot of taxes because we like the standard of living. We like the Australian dream, own your own home. That's kind of where everyone's money goes, isn't it? And that's why we probably lack in the technological area.
But because we haven't had a period where we've gone through a bear market in the property sector, property's
why
now
would you
just
change?
so unsustainable.
Yeah, it's like it's blind faith, right? And with good reason. It's if you want to build wealth, property's a great option. But it's like at what expense? And not on an individual level, but from a
Well, probably because our mortgage repayments are so high is why we're not leaving our jobs as well. And so we're happy to go and work for big institutions or whatever, so that we can afford to pay.
Until you no longer have, until the bottom, the lower economic status people, whether it's because of age, or just struggle. Until the option's not there to have mortgage repayments. And then it's like, okay, well, where's the innovation go? So I'm hoping that the younger generation really spurs that on for Australia. But, the problem is the country's run by by boomers. Unfortunately, the country's...
You see that everywhere.
It's like, well, can we ever see... Do we, Scott Morrison, you reckon he's going to come out and talk about fucking Bitcoin? Not even a mention, Andrews...
I mean, we were one of the first countries to look into having our own central bank digital currency, and I don't know where that is.
Haven't heard about it
since, basically. They've obviously just parked that. But yeah, no. I don't see it happening anytime soon. We don't really have any sort of community here. Obviously we do see a lot of startups now that are competing on a world stage. You'll just look at Canva, look at Atlassian, Afterpay, these sort of companies. And so we're definitely succeeding in that regard.
But where are they going?
Yeah, that's right. They're all going overseas.
Yeah. So that's the problem. Why aren't they here? Why don't we keep them here? What kind of incentives do we have to have?
The progression that Commonwealth Bank just made with having the custody for crypto is pretty interesting.
But it's third party.
It's third party, but it still will.
It's still great for
drive
awareness.
Adoption. Yeah,
it'll drive adoption, but will it drive? Will it drive startups? Will it drive actual companies?
Well, unfortunately, here in our country, our banking system is pretty innovative compared to the world stage, and so we were using tap to pay and all that sort of thing before most countries were. A lot of countries, when you go to Europe and you go to the US, you still have to carry around money in your wallet, whereas I don't ever carry a wallet around here, and I haven't done so for years. And so we're innovative in that regard. A lot of us do our banking online now, but now we're just seeing them buying up neobanks and that sort of thing because they need to obviously build out their UI and make it more customer centric because they realize that millennials, we just do it differently. When was the last time you guys went into a bank?
I have to go in to start a new company account, but that's once in a blue moon.
Yeah, or you might have to if you go and sign a contract for a property or something like that. But even then, we have companies like DocuSign, and anytime I now have to print something out physically and sign something, I'm always ask them why haven't you guys partnered with DocuSign yet?
Yeah.
Such a pain in the
and
ass.
If you notice, a lot of banks have closed up. I know that.
Yeah, a lot of branches are closing.
3 in my area that are just gone because I reckon maybe once a year if that.
They only service the elderly people, and typically once you retire as well, your spending decreases. So there's less and less need for people to be using branches and banks in general. If you don't have it on your phone, then you're falling behind. And now we're seeing digital wallets with crypto and all this sort of stuff, and you can actually transact instantly as opposed to making a payment, having to wait 24 hours, all this nonsense.
Man.
It's so slow and old, isn't it?
It's the worst. It's actually the worst.
Once you have started using the crypto native wallets, you just realize that everything else is so outdated.
Oh yeah, when you can't unsee it. We've said it multiple times. You can't unsee it. Yesterday I was moving money around to buy that New York coin. I had to kind of, that's probably the roadblock is,
Well, it's the UI and the UX. Like that has a long way to go, obviously. And like if you happen to put in the wrong address, like goodbye to that money. But so it's a little bit clunky, but that'll get.
But Binance, Binance have come out and they've got a fund now that's for money that goes missing, and you'll see a lot of that stuff come in, so that because that'll force more adoption, and it's in their best interest to do it. These places, it's just more about how much of these funds can they actually allocate, and that'll just be more and more over time.
Or as more deposits come in, obviously, then the government will probably come out and say that they'll insure it. Just like they do with banks and with equities and all these sort of things. It just takes time for it to mature and adopt.
All right. So last thing that we want to talk about is the metaverse, because it's been I've had a lot of people asking us to
about
talk
the metaverse.
Oh man, like it's like more metaverse. So I guess like the conversation that we've been having is like, Facebook's.
We have some conflicting ideas, don't we?
Yeah, definitely. So I guess the conversation we've been having is the fact that obviously Facebook are trying their hardest to obviously adapt with the times
and pivot away from their current PR troubles.
I think obviously the writing's on the wall. Like it's like Web 1 to Web 2 was it was the difference between a website and then social interaction. That's what Web 2 is. It's a lot of your Facebooks, your Instagrams, where you can interact with people. And just like Web 2, what captures our attention? Web 2 captured our attention a lot more than Web 1. That's why a lot of us moved into that space. The same thing's happening with Web 3, and Web 3 is all about value. It's all about the value exchange and the ability to extract value rather than give it, if that makes sense, as a consumer, as someone who's in it. So. The conflict that we had was obviously about what the metaverse is initially, and then obviously Facebook and whether or not we think it's going to be successful. And I genuinely think that no. Like I genuinely think that if Facebook want it to be successful, they're going to have to perfect the timing of the transition in business model. Because if you look at Facebook's business model, it's all advertising. So how do they generate revenue? Well, they capture your data and then sell it back to you for a premium. And that's how they make money. Now, if you think about Web 3 is totally different. It's about being open. You're no longer creating gateways to keep people in your platform.
This is going to be the issue with building out the metaverse, and that's probably going to be one of the hardest things to do, is to figure out a way to make it, instead of being closed source, obviously open source, where it's decentralized and you don't have a central entity sort of controlling what's happening within it. So it's going to be interesting how corporations will actually... there's still the advertising way for them to do that, and there's going to be obviously money to be made on the actual wearables and services within that. But yeah, it's completely different to their current business model. And I was saying before, they're not really an innovative company anymore. All they do is acquire companies, and
they buy the innovation.
They bought
Instagram.
They bought WhatsApp. They copied
Skype.
Stories. Yeah.
Didn't they buy Skype?
I thought Microsoft bought Skype.
Maybe.
Possibly.
Yeah.
But yeah, that's all they do. They acquire companies. So I don't know how they're going to go. Obviously, they've shifted a lot of resources into looking into this and building it out.
I just think that their view of it's wrong. Like their view of it is still a platform. They still think that it's a platform. That's why they've gone all in on Oculus. And although that technology is going to be really important, it's like our world is not going to be the Oculus. It's just not. Like I just don't think that's the way to go. And I think, okay, cool. Like, well, you're going to wear an Oculus and just be advertised to every fucking 10 seconds.
I think it will play a role in a lot of people's lives, because we already see people playing video games and spending a lot of their time obviously scrolling through Instagram or whatever the case may be. So there's definitely going to be a world for it. Mark Zuckerberg thinks that we're just going to wake up, we're going to immerse ourselves into this world from the moment we wake up until the moment we go to bed. And I just don't think that is going to be the way that it works out, because who really wants to live in that sort of world? Like, yes, obviously there is a lot of people, but it might be something that we go in and out of briefly throughout the day, but there still is a role to play in meeting people face to face and living yourself or living your normal life. Like, I don't know about you guys. I've been back in the gym finally, and the gym is packed.
Oh yeah.
You know, and like I don't see people. Yes, there's going to be a lot more people working out from home, and like you see a lot of people working out on Zooms, and in a way that is a metaverse. And the way that he sees it is that people are just going to be putting on these goggles, and then you'd be working out with other people around you and all this sort of thing from your living room. But I just don't see it that way. Like,
I think the metaverse is framed, like there's been a few things chucked around, but for me the metaverse is just a point in time. It's not we're not building a universe. Yeah, it's a point in time where we spend more time in the virtual world than what we do the current world. And
Yeah.
I actually see it more as that. I think it's like,
I mean,
it's
in
the
a way, we
blurring-
kind of do. Like this, our phone is a digital world. It's a digital metaverse.
Yeah.
And so, yes, we probably will spend a lot of time in it, but not as much time as what I think he thinks that we will.
I think you know, if you think about it, it's like they literally have to get it perfect, and they have to change their mentality around how they think business is done. Because Web 2 was about trapping people in. It was about creating gateways so they couldn't leave. It was about creating monopolies. Web 3 is not about that. Web 3 is about creating value for people, not extracting it from them.
Which is why it needs to be open source and decentralized. And the issue that I see is that a lot of these private companies, obviously like Microsoft is a big one that's building into this world. Apple will probably be a big player. But they, like you say, they trap you into their ecosystem and they don't want you to shift anywhere else. You know, and so I don't know how that's going to all play out.
Yeah, that's why I don't think that. Honestly, you know, who am I, right? But I don't think that they can do it. I honestly don't, because it means they have to change their business model. And if they change their business model, where is their revenue coming from? Nobody wants to put on an Oculus and be fucking advertised to.
But there will be a place for that.
There will be a place for it, but nobody wants to put that on and generate revenue. So it's like, okay, so yeah, great. At what point can the Oculus take over the revenue that comes from ads? Because it's one or the other. Yeah, it's not both, because nobody's going to use the Oculus while being advertised to. So it's like, can they do that?
It'll be subtle advertising though. Like you're in this world, and ad placement is.
It won't work.
Well, yeah.
I'm telling you, it will not work. People
I'm
hate.
thinking it's like
why
on a
did
billboard
why?
or
Okay,
something.
you
Well,
have
yeah,
you
something
have
like
to
that.
ask yourself why. Like, okay, so why? Like, how many millennials use Facebook?
I'd say a lot.
How many times do you use Facebook in the last actual Facebook, not Messenger?
I maybe scroll on there once a month.
And now you know, how old are you?
30.
What do you think of a 15-year-old?
Yeah,
They don't use it,
They're spending it all
They use
on
TikTok.
Yeah, TikTok. Yeah.
right? They Facebook has to somehow capture those people back in order to be successful.
That's true. But that being said, they've also they've pretty much captured. It's them and Google who have captured the whole advertising market. And
Exactly.
so-
That's my point.
but
But
they'll
they're
still
willing
have a
what to
place
give
for
that away.
Huh?
They're willing to give that side of the business away.
No, they have to.
So wouldn't it be better then to maybe make two businesses? Meta is the side business that then they focus into, but they still keep this core business.
Yeah, but okay, cool. So then who's going to go use that core business?
I don't know, the people that are originally there.
The shift away from Web 2 is going to take a long time. So that business still has a bit of a,
I don't know,
a runway.
man. I think that's. I don't know if it will. It's you know, what's the adoption rates on Web3 at the moment?
Yeah, but you also have to realize that a lot of this technology is going to take probably a decade or two to sort of build out to the point where it is actually user friendly. Like in its current form, it's very clunky. And
Yeah, but that's what I'm saying, right? That's why I'm like, okay, so you're talking about the Oculus.
Yeah, but then everything within it, like the actual virtual world, is like they're starting from scratch. That takes time. Like that's a lot of coding hours.
Yeah, that's what I mean, though. I don't think that's the mentality that I don't agree with, right? Is like, we're not building out a virtual world. Yeah, like
What do you mean?
we're not building out, like the metaverse is not a place. Yeah, it's not like Facebook has the metaverse or Instagram will create the metaverse or, you know, the metaverse is a representation of communities that exist in that space that we spend more time in. So that's why, you know, Discord is an example, right? People will now spend a lot of time on Discord, right? Discord is open. They don't trap you in. See the difference between Discord and Facebook, right? Whereas you can exist in many different communities. I think the winner-take-all market is actually the person who can connect the communities, right? So that you can spend different times in different communities. And that's where I think, like, that's what I mean is like, we're talking about, I think that the adoption of Web3 is happening at such a quick rate that spending time trying to build the Oculus is actually wasting time and falling behind. Because you're right.
But what's going to be the gateway into the digital world?
We're already in it. Yeah, like we're already existing in these worlds.
So he's sort of like
it's
currently 2D though. It's currently 2D. He's envisioning a world where it's 3D, where it's all around you.
And that's
so like he mentioned in an interview with The Verge where like they currently apparently at Facebook have meetings where you could just be sitting down like we are right now. You put on a VR headset and then you look to your right and there's someone sitting there. There's someone sitting there. There's a screen up there for anyone who can't enter via VR. And then you can also like bring up whatever document you want to share. So currently on Zoom, like you can only share one screen, whereas in this sort of world, you can just share like everything that you need to. Like that's the sort of world that he's envisioning. And I do see a place where that happens.
Yeah, but I don't think that's the majority.
No, but my view is that I think AR has more of a role to play than VR. So where you're just going down the street, you may have a set of glasses on or something like that, and then you have things popping up. So like, say you have, like you set up on your phone that you're going to this place, instead of Siri telling you where to go, on like your visuals, you'll have like an arrow pointing you to go down this street and that street.
And that's where I feel like the advertising side of Facebook can come into it.
Instead of actually having a proper billboard with advertising on it, it'll just be a virtual billboard and things like that. So I agree. That's where I see the world, like the metaverse, shifting.
I don't think that, like, for me, it's not about that. It's about identity, right? So it's less about the experience and more about my identity than anything. And I think that's where they're getting it wrong, right? Like, what people care about the most, think about it. Like, we're all going through this right now. We don't want to fucking pay taxes. We don't want to do any of that shit anymore because we want to hold the value to ourselves. We don't want to give it away anymore, right? And it's like, yeah, like, cool.
Well, they're the ones who have profited off all of our data, and so now...
So what's different? What's different except now you get to wear a fucking pair of glasses? I don't care. I don't want your glasses. I want value. I want to hold my own value.
Because it's Web3, they will incentivize... Being an open network and being decentralized, they will incentivize you to go into this world, to build it out, all these sort of things. Like a lot of creators, a lot of coders, all these sort of thing will be able to go into those worlds and extract value from it. So like just like how Travis Scott came in and he did that concert tour, similar things to that. So he'll be able to come in and actually extract value from being able to provide to that community that was present there. So there is a way for them to do it, and I'm sure like who actually ran that? Was it Zoom? Who ran that?
Fortnite.
Oh, it was Fortnite. So I'm sure Fortnite made it like so much money from that. So
yeah, I don't know. I'm not sold on it. I just think that I think their mentality around it is wrong. They're focusing on the wrong things. People don't care about that anymore. Like, I honestly don't think that that's what people care about. I think people care about the right incentives. And for that to happen, Facebook has to change its business model.
Time will tell.
Yeah. I think that's at the core. It's like people don't care about the experience. They care about the reward.
I disagree. I think people do care about the experience.
Yeah. I don't know.
Say we're in a time like this where we're trapped in COVID. There's a concert going on. Like you want to see your favorite artist, and they're performing overseas somewhere, if you can immerse yourself into an environment where you all of a sudden you are in that situation, you can sort of feel the energy, kind of feels like you're there.
When's the last time you went to a concert?
Well, obviously not for ages because of COVID.
Before COVID? Couldn't tell me.
No, I could. It was Rufus Du Sol.
Yeah.
And it was great. I loved it.
Outside of that.
Oh, I don't know.
That's what I mean.
It's off the top of my head.
The argument for me is that that's very niche.
But that's me.
Yeah, but that's what I'm saying.
There could be other people.
That's very niche. So I'm saying what the majority care about is not the experience. It's actually the value, right? What people care about is the fact that they don't want to be taken.
Isn't the value isn't that from the experience?
No. I think it's more about data and identity.
And I think it definitely would work in a time like now where there's pandemics and there's lockdowns. But once we're out of these, we want to be out.
Yeah, that's true.
I think it's purely about data and identity.
What if you can't afford to go and fly to Belgium to go to Tomorrowland?
Yeah, but that's what I'm saying. Like, Tomorrowland is what? How many people go to that? 6 million?
It's not that big, is it?
I don't know.
Isn't
million?
only 100,000 or something?
100,000.
Yeah, maybe 100,000.
I don't know. Okay, and that's what I mean. On a scale of majority, these are all micro things. The majority of people, what they care about...
Yeah, but these are all micro things that play into the bigger macro. And so this is the kind of metaverse that I'm sort of envisioning.
I think it's less about, okay, let's build this virtual world, and more about, okay, I want to own my own data, so I'm not taken for a ride anymore. I think if you look across the world right now, people are sick of being taken for a ride, right? And the evolution of society right now, and as more importantly, the generations, they just don't want to be taken for a ride. You know, that's the reality. And I think that's what matters more now. And I think the companies that can create communities and sovereign nations, and then create the right incentives in there instead of, and that's what keeps people around. You know, so I don't necessarily think it's about that. I don't think it's about putting on an Oculus and then having the experience. I think it's about, this is what I'm into, right? And then I just want to make sure that I'm getting rewarded and the incentives are there. But more importantly, I own my own identity and I own my own data.
Yeah, that's true. Well, so it's interesting. I mentioned before this the Constitution DAO that's been formed because there is only 11 constitutions available, and only one was private. And so the estate, because the guy who bought it, he passed away, and so the estate is looking to sell it, and Sotheby's is organising it all for $25 million. It looks like it's going to go on auction for. And so this DAO has been set up, and they're raising money to go and purchase this. And so, but you're not going to get like any sort of value out of that apart from actually owning, like feeling like you are a part of owning this thing. And isn't that just the experience of owning the Constitution? Because there's no financial reward. You get voting rights on what you actually do with it and that sort of thing.
But I think that's what people care about. Right? I think people care about ownership. You know, I think that's what people really care about, and more importantly, owning their own identity, not giving it away anymore. So because think about it, Facebook, what do? They take your identity and they monetize it. The banks, what do? They take your identity and they monetize it. I don't think just because Facebook can create a fucking Oculus, my thing is I don't think that changes what they're trying to do, right? Because the only way they can generate income is by creating the right hardware, and great, but there's still the experience that happens within it. And it's like, okay, cool. Well, they're just going to take all their advertising revenue and chuck that in the bin. That's a mountainous task, yeah? And I think that's where these companies are going to struggle. Google. You know, these guys will prove me wrong. I'm almost certain that Facebook will come out and probably prove me wrong, right? But I think the most mountainous task ahead of these Web2 companies is the fact that they're going to have to completely shift their business model, which is risky for them.
Well, it won't be so monopolistic. So there'll be other players that obviously enter the space, and over time, they'll start to lose a lot of that market share. And like we see that all the time. Even from Web 1 to Web 2, we saw a lot of that shift from your Yahoos and AOLs and IBMs and all this sort of thing, and it shifted towards your Facebooks, your Microsofts, your Apples and these sort of things. And we'll probably start to see the same thing with different Web3 companies that emerge, and a lot of that value will shift towards those businesses.
100%. All right, we've got to wrap it up because we're running out of time.
It was a long one.
Big conversations.
Yeah.
All right, guys. Web3, inflation. You know, there was a lot of conversation there. More importantly, we're just trying to have conversations that help you navigate the future, and more importantly, get ahead. You know, I think that's at the crux of everything we do here, but more the Investors Podcast. We're in such an interesting time. We're in a massively changing world. So, you know, we really hope you enjoyed the episode. Once again, thank you for the support. I honestly can't. We actually get more and more every week. People sharing, subscribing, commenting on the YouTube. You know, make sure if you're listening to this via audio, you go and just subscribe to the YouTube channel as well. If you want to kind of watch it in real time. But you know, all the support we're getting, just so thankful. So really appreciative. And thank you to you two for the conversation, for the work. Brados and Disco. John.
No worries.
All right, guys. Hope you enjoyed the episode, and we'll see you next week. Hey, guys. So as we end today's podcast, I wanted to say a massive thank you to you. You've made it to the end, so you've tuned into the whole episode, which is something that we're extremely grateful for. If you're new to the podcast, hitting the subscribe button is really, really important to us because it really helps us out a lot. The more subscribers we get, the more, the bigger the community we build, the more that we can progress with our vision, and the more that we can start to expand and keep having, you know, these amazing conversations. So we're really thankful. And one thing that we're also really thankful for, which, you know, has been a big driver for me personally with the podcast, is just the messages that we get on the Instagram. I still go through the Instagram and like to have conversations with people that are engaging with us. It means so much, and it's great to hear the stories of people progressing and learning and how we're impacting you, the listener. So that's something we're really appreciative of. And I actually want to go through and actually mention some people who we had some great conversations with on our social media, and you know, these people reached out. So Alicia Pyers, it was great chatting with you, and I'm super appreciative for you reaching out to the Instagram, and it's great to hear your story and what's inspiring you and the changes that you're making. And also Jess Dinning. Jess was lucky enough to talk to you last week, and that was really, really amazing. And just the same thing goes. The conversations that we have with you guys, it's crazy how much of an impact it makes on us as a company and what we're striving to do. So a massive thank you to you two and everybody else who's reaching out and sharing and doing those things. But the two things that you can do that will help us the most is make sure that you're subscribed, and a big thanks to everyone who's leaving reviews as well, because that shows people that this is a safe space for them to come and listen and learn, and that's really the most important things to us. Really hope you guys enjoyed this episode, and we will see you next week.